Today, we're going to be talking about something that every business owner needs, but not everybody fully understands, and that's business credit. How do you actually build business credit from scratch? What are lenders really looking for? And how can you use credit strategically to scale your company without overextending yourself? Joining me today is a representative of
Federal
Logix
Credit Union,
and we're breaking down how to establish credit, qualify for lines of credit, and use funding to fuel business growth. Whether you're in real estate, construction, or any small business, this is an episode you don't want to miss. Welcome to the podcast, Luis. How are you?
Awesome. Thank you, sir. How are you?
Good, man. So I appreciate you coming out. Let's jump right into it. For a business owner that's just starting out, what is business credit and how does it differ from personal credit?
So business credit is a business is kind of its own entity, kind of like its own person. So you could think of it as like another individual, just a kind of extension of yourself, right? If you're the business owner. But business credit is pretty much kind of like consumer credit. It has its own social, which is the EIN number, right? And it's reported under that credit bureau or credit report. But it's pretty much the same thing, just with business credit. Now, to start it, you just have to apply under that EIN number and look to get approved. Each bank has its own criteria, right? They either want you to be 1 year, 2 years in business or more, maybe. But it's pretty much the same. If you miss a payment, there's derogatory marks, which what we call late payments, DROGs. If there's bankruptcies or whatnot, Chapter 7s, Chapter 11s, they're all reporting under that specific EIN number, which is that entity itself. But you could start it by reaching out to banks and asking them for criteria of how long they want you to be in business for. And depending on whether it's less than a year, or maybe they even do loans for startups, then you can essentially apply for either a credit card, a term loan, or an auto loan, or what have you. And then you can start that credit that way. As long as you keep it in good standing, then that credit is just going to get, improve. And then your credit lines you slowly would work on increasing your credit. Trade lines is what we call, right? Your credit card limits, your auto loan limits, and all that good stuff.
In a personal credit, you have like a credit score. Is that the same thing in a business? And in a personal credit, you have like Experian, you have TransUnion, and the other one. How does that work from a business perspective?
For the business, they have just one. It's just kind of like the business credit for, can't remember from the top of my head what it's actually called, but it is, yes, it's a credit report within itself. We personally, we deal with, we have what's called a personal guarantee, right? So what happens is we give you the loan under the name of the business, but you guarantee it under with your credit report, your credit score, and what have you. And if something happens and you default and you don't pay it, then it'd fall back on your credit report. It's just a way for credit unions or banks to make sure that you can't just get a loan under that business and then maybe not pay it, close that business out, open up another business, and then that debt would just, kind of be forgiven.
Is there such thing as business credit without a personal guarantee?
Yes, there is. There's lenders out there that do it, but keep in mind it's all risk-based, right? So those that don't have that personal guarantee almost always have a higher rate because of the risk that's involved.
Got it. That makes sense. Okay. So I actually didn't know that there was a credit report, like score attached to the business, just like it would to a personal. I was under the assumption that there wasn't an entity like that. So that's actually pretty good to know. Okay. Now, are there restrictions as to what type of company you have? If it's an LLC, an S corporation, a C corporation, how does business credit vary depending on the type of entity that you have?
It doesn't. You could be a sole prop or general partnership. It could be an LLC, a corporation, nonprofit. It's all more or less the same. Yeah. It for us, and I think for other banks as well, it's not really the entity. It's more like what business you're in.
Let's go back to the business credit score. So in my personal credit score, obviously, I think tops is like 850. It may be something that you don't know, but how does that work from a business perspective? Is it like the same 850 or is it a different metric, or how does that work?
I'm not entirely sure because we deal mostly with
Personal
The
guarantees.
personal guarantees, right? Actually just saw one because we do credit lines, and when we do credit lines, they pull the business credit. But I'm not too well versed with that. I can definitely look into that for you though.
Okay. So let me ask you this. What type of funding is available for business owners? So you have one of them that is a credit line, right?
Right.
What are the other options that business owners have?
So we have credit lines, we have term loans, which is kind of like just like your regular personal loans, they're unsecured, and then of course we have the auto loans and then the credit cards itself, and then for like we also do commercial real estate loans as well.
So let's talk about a credit line and a term loan. How do those work? What are the maximum amounts that you've ever seen anybody get? And what are the repayment periods look like as well, too?
Yeah, great question. So line of credit is with us. Well, a line of credit itself, it's you can kind of look at it as kind of like a HELOC. I'm sure you're familiar with the
Yeah.
home equity line of credit, right? Where they give you a line of credit, let's say it's for 100,000. You use that line of credit and you use it and pay it back, use it and pay it back, kind of like a credit card itself, but minus the card, right? And then with us, we have a 2 year period where you would use it for that 2 year term. And at the end of the 2 year term, if you have a balance, there's a balloon payment, which means you have to pay it all in full, or you would need to renew into a new line of credit and whatnot. There is a $200 application fee that you'd pay if and only if the application is approved and funded. And then there with us, there's what's called a 30-day cleanup period, meaning within the first year, you'd have to have or not carry a balance for 30 days, whether it be consecutive or added 30 days within the year period, where you have to have no balance, just to make sure that you're not just leaning on that line of credit too much and you're not too leveraged, right? And it shows that you can also repay and use it and repay.
And then what's the maximum amount you've ever seen on a credit line? Is it like $1 million for a certain type of business? Is it $500,000? Is there a limit?
So with us, there's a up to a $500,000 limit. I've seen 250,000 personally. Anything over 50,000 with us, however, it does require a collateral, whether it be a residential home or an investment property or a commercial property itself. But it does anything over 50,000 with us requires collateral.
Can collateral be business equipment like cars, machinery, that sort of thing, or does it have to be? Is it more like a house?
We prefer property. I mean, with us, we're really big on trying to make it work. We may look at the exception, so we may dive deep into what equipment you're looking to put as collateral, and if it what it's worth, right? And if it's worth anything, or what it would be worth if we'd have to collect and resell. But usually, ideally, we'd want a property, and we'd want to be at 70% loan to value.
Got it. And does that property have to be your primary, or can it be like an investment property, or does it not make a difference?
It doesn't make a difference as long as it's your property. Yeah.
Got it. That makes a lot of sense. Now, what are the interest rates on a credit line? Are they more than credit cards, less than credit cards? Are they similar to like a home equity line of credit? What do those look like?
They're fairly similar to the home equity line of credit. I would say somewhere around the same, if not maybe depending on on your credit, right? But let's say top tier, which is 730 or higher. Line of credit is at right now currently at 8.75. It is a variable rate. It does mirror the prime rate index, which currently is at 7.25. And then on top of that, there's a margin, 1.5% margin, which is what we charge for that line of credit.
That's how much you guys make, basically.
Right.
Got it. Okay. Now, how is a credit line different than a term loan?
Term loan pretty much is 5 year period. You borrow it as you're paying it back. You can't use that line that money anymore. And at the end of the 5 years, you know you're gonna pay it back, and there's no balloon payment. You don't owe anything on at the very end if let's say you don't pay off everything you owe. It's what's called fully amortized, right?
Got
So
it.
all the payments are made to where you're gonna pay it at the end of the term, 5 years.
So basically, like, let's say I get a lump sum of $100,000. I got 5 years to pay that, and that's amortized almost like a car loan, basically, where I'm paying both principal and interest, basically. Back, so
Exactly.
at the end of 5 years, it should be paid back in full, basically. Now, what do the interest rates look like there? And then also, what are the limits as well, too?
So the limits are pretty much the same as the line of credits. Up to 500,000, anything over 50,000, we need collateral, property, investments, commercial, what have you. Pretty much the same. Now, with the term loan, the rates are, I want to say they're at like 7.75, so about a percent less.
Okay, and what are those based off? I know that on the credit line, it was based on prime. Are these based on prime as well, too? Just a smaller margin?
Correct. Yeah. So based off prime, just a smaller margin because we're looking to it's just a fully amortized loan where we know you're going to pay it back in X amount of years versus the possibility of there being a balloon payment at the end of the term for the line of credit.
Got it. And let me ask you this: on a fixed loan, or it sounds like the term loans are fixed and the credit lines are variable. Meaning, on the term loan, it's a fixed rate, basically.
No, great question. They're both variable. They're both a variable rate and they both mirror the prime rate index. The margin with us is fixed. So it just depends on whether the prime rate is going up or down. Currently, obviously, as I'm sure you're aware, rates are on the downward trend now because they've been crazy high, right? So it is a variable rate technically, but in the interest rate climate we're in, we don't really foresee them to go up. We actually foresee them to go down. But again, we that's the $1 million question, right? Where are rates going, right?
So
So
basically, in both scenarios, your payment changes every single month, basically.
it can potentially, if and only if the Feds change the rate.
Okay, and what about credit cards? What do those look like as well, too? What are the limits on credit cards, and how do the rates work on business credit cards?
The rates with us, we're looking at we give a intro rate of for the first 6 months of 5.99%, and
Okay.
then we're looking at 17.99% thereafter. Limits range from 25 to 50 to 100,000.
And do those require personal guarantee as well, too?
Correct. Yes.
What are most people using business credit for, or the type of businesses that you guys are helping?
I've seen a lot of working capital, equipment loans. So I'm working with the gentleman that owns a firehouse subs out here, and he wanted to buy two fryers, and he bought the fryers, and we're giving him the loans that way he can replenish his savings and stuff like that. Equipment loans. If you're looking to kind of get by throughout the month and pay your payroll or your expenses. Meanwhile, you have maybe net 30 or account receivables essentially, right? Or just growth if you're already established and you want to buy another or kind of expand on that business.
Got it. What's the process look like to qualify for any of these products?
So depending on the product, right? Auto loans and credit cards, you have to be in business for 1 year. The term loans and line of credits, you have to be in business for 2 years. But then we get pretty involved if let's say it has to go through underwriting. We're looking at 2 years tax returns, personal and business, profit and loss statements, and then like 3 months bank statements or what have you. But once that's received, I usually ask about 2 business days for me to do the what's called a cash flow analysis to see how liquid your business is, how much it cash flows, and then we send it off to underwriting. Underwriting usually asks about a day for them to turn around and give a decision, or if they have any questions, they'd ask then.
For those people that don't understand a cash flow analysis, can you go a little bit deeper in that?
Yeah, yeah. So it just calculates. It's based off the tax returns. When you file your 1120, 1120S, or what have you, your business returns, depending on what entity you have or what have you. We're looking at the gross profits, the cost of goods sold, which is what costs you to do business, and then any other expenses like interest expense, depreciation, and all that good stuff. So it's just kind of an overall look as to see what kind of money you really bring in net at the end of the month or the end of the year, to see if you are it's a sustainable business, meaning it's actually making money and you're cash flowing each month.
In what situations should somebody be getting a line of credit versus a term loan and vice versa?
That's pretty subjective, but for the most part, a line of credit is good for someone that's looking for working capital. To, let's say, you want to have payroll covered while you're collecting on your accounts receivable, right? Or maybe you want to kind of expand and you're doing it slowly and you don't need a term loan right away because it's given to you all up front and you're fully amortizing. Maybe you want to pay for it as you're using that you're growing that expansion. Or but a term loan is best if, let's say, for example, if you're buying equipment and you know you need those fryers, right, for your restaurant or a fridge or what have you, and you're going to make you're going to buy that equipment and then you want to pay it off in 5 years, and you don't want to worry about there being a balloon payment at the end of the month, and you want to know that your monthly payment every month will be the same, and at the end of that term you're paying it off and you don't have to worry about, you know um, pretty much having a balloon payment. Yeah.
What are the mistakes that you typically see people do whenever they're looking into business credit? And what advice would you give somebody looking into business credit?
Oh, that's a great question. That's a tough one. I would say being over leveraged, having too much already credit and asking for more credit, right? Also, the business not cash flowing, maybe on the books. So maybe you actually make a good amount of money, but you don't tell Uncle Sam you make a lot of money. Therefore, I can't justify the loan for you, right? Maybe it shows on your bank statements, but it doesn't show on your tax returns. Obviously we all know Uncle Sam wants their piece and we want to avoid him for having the biggest piece, right? But you can't have your cake and eat it too, right? So you gotta report to justify the loan that you're looking to get. So I feel like that's one of the biggest challenges is they tell me, hey, look at my cash flows, my tax, my not my my bank
Bank
statements, look at all
statements.
my incoming deposits, and I'm like, yeah, but it doesn't show that on your tax returns. How does this not, it doesn't add up. So I would say that's one of the biggest challenges, and also a lot of business owners when they don't have credit and they're offered credit, they don't want to take it, but when they need it the most is when usually we don't want to give it to you, right? Is meaning you're already over leveraged. So for example, if I do some kind of loan for you and I offer you another product that you can use, but you don't take advantage of it, and then later on you already got other credit cards or a line of credit or loans, and you max those out, well, you could have had the one that I offered you then and maybe not used it. And it's just like pretty much taking advantage and having credit when you don't need it is what I should say, right? Having credit when you don't need it versus getting credit when you actually need it.
Yeah.
It's pretty much what I run across because by then you're already too over leveraged.
Yeah. And when you say people are too over leveraged, that just means that their cash flow isn't where it needs to be and they're almost relying on lines of credit to pay their monthly overhead? Or does that mean that they've got too many? What do you typically see in that over leverage?
Yeah, so they have too much debt or what income they're having, and then they absolutely need this line of credit, right, to make the business run, which it shouldn't be that way. This should just get you by and not be crucial to the existence of the business or the business itself. So yeah, pretty much having too much debt and not enough income or accounts receivables coming in the timely manner, right? But yeah.
Do you ever see business owners get to the point where they can't make it work and then now their property that they put as collateral is at jeopardy?
I haven't seen that yet. But usually we're pretty conservative. Usually when we're there, we can pretty much see the bigger picture and say, all right, well, this isn't gonna make it any better, right? Like us giving you this line of credit
Isn't going to
and
help you.
isn't going to help you because we're not in the business of taking people's homes and reselling them, right? Or putting liens on homes and waiting on you to
Default.
sell and right. So yeah, we're pretty
So it's basically
conservative.
you can see the cash flow analysis and be like, hey, look, the line of credit's not your problem. The problem is that you've been negative for 18 months now and you've depleted all your capital. And the problem's not the equity line of credit. You're going to run right through it if you continue with the business model that you have. You need to change the business model or make some changes to your business. That's the solution.
Exactly. You
That
hit the
makes
nail on
sense.
the head. Exactly.
Cool, man. If somebody wanted to get in touch with you, how would they do that?
They can call me directly. My phone number is 818-565-2785. Or they can email me. My email is L for Luis, TORRES as in Edward, at lfcu.com.
Great. Luis, I want to say thank you so much for taking the time to be on the podcast for our viewers. We had Luis Torres with Logix Federal Credit Union. We talked about business credit. We talked about lines of credit. We talked about term loans and credit cards. If you've enjoyed this episode, make sure to hit that subscribe button. If you feel that this episode was helpful, make sure to hit that like button. Also, we do have a different episode on how to get a business car loan with Luis, so look for that on our channel. Thank you guys so much and appreciate your time.